Hello, hello, hello. Good morning, everyone. It's Tim Davis coming to you guys with an early morning market review. I've been a little busy here lately, but no time is better than now because the markets have been looking very interesting. And I'm going to start off by taking a look at the SPXA 200R, which is the tool that tracks the percentage of S&P 500 companies trading above the 200-day moving average. And what I did for all of these all of the particular indices and the tools and things I'm going to be showing you today is I put a Fibonacci retracement tool on it because a lot of them have found support and there's some overhead resistance, a lot that we need to pay close attention to. With this tool, um, we saw that it came down to a level of support and started to consolidate. To see what the overall sentiment of the market wanted to be and wanted to show. So we came down to the 50, right there at the 50 simple moving average. The 50 simple moving average came down to that level, the 50 EMA or 50 simple moving average. And it looks like we started to bounce around right at this 50 simple moving average, 50 SMA. So I was able to do fib retracement around that area, and it looks like we want to bounce from this level. If you look below, see the RSI starting to point up. Look at the TTM squeeze starting to turn positive. So that is overall positive temporarily for the bulls and overall market. So where can we see the sentiment tool go? If this sentiment tool continues to strengthen, then you'll see the overall market continue to gain momentum as well. So we dropped down below that 80% level, which I was telling you guys about for a while, that the overall markets have been, that this sentiment tool has been struggling to get above. This 80 level right around here. You've been struggling to get above. You see, we made up to this 80 level right around here and came right back down to 60, around about 60 to 63%. Did not drop below 63%, which I thought we could because uh, we've seen that level before. We've seen us come down in this area before and continue to go down, such as this area over here, like we did here once before. Made up to around this 80% level and came all the way back down to about 30. But we did not do that this time. We settled right at the 50 simple moving average. And that's a strong area of support. And I'll point out strong area of support because we saw us hit this level before in the past, right there where I just circled, and bounce. So we hit it a couple times. Here, all around here, all around here. That became a strong area of support. So we knew when we got back down to this level, there was a strong possibility that the markets could consolidate and not break below the level and find a way to either bounce or finally break below. But it's like we're going to bounce from this level, folks. So the bulls look like they may be, the sentiment, overall market sentiment looks like the bulls may be in control for now and ready to come back up and test this 80% level. So I think we could have another strong week this week, or at least to get into the week at least. So that is a look at the overall market sentiment tool. So now we took a look at that. Let's take a look at the overall indices. All right, now since we own this SPXA 200R, let's go straight to the SPX, S&P 500. One thing I want to point out right out the bat, this is the weekly chart I'm looking at, folks. But I'm going to switch back between the weekly and the daily. And the weekly chart shows an RSI of 84. So we already in overbought territory. Could we continue to go higher? That's a possibility. And as markets grind higher, let's keep in mind we are at overbought territory on the weekly chart. And last time we seen such a high RSI, we got around 87 back in March. And let me show you that. So you got about 87 back in March. And when we got to this level, RSI quickly reversed. It made a quick reversal. and only back down to the 20-period moving average, and then it reversed. It went back up. So could we see a strong reversal here sometime this summer? I think if we could, we definitely could, because RSI is definitely in nosebleed territory, and hovering right around 84 right now. But could we march higher? Yes. And I'm gonna show you one of the reasons I think we could march higher, because some indices are playing catch up. With those indices that are playing catch up, it'll probably continue to hold up other indices as well. But the S&P 500 is definitely in the overbought territory on the weekly chart. With that 5,600 level, 5,600, 5,655 to be exact, is the level that we was at before. Looks like we may be looking to go retake that level and possibly start to consolidate, or even march a little higher than that. So we'll be watching that level carefully, the 5,655 level, very carefully this week. See if we break through that level. And if the S&P 500 can break through that level, break through this 5655 level in a significant way, folks, it could see 5,700. It could see 5,700. So something to pay close attention to as we pay attention to the overall market's movement. All right, then let's go take a look at the Dow Jones. Dow Jones Industrial Average. And here's one I think is itching for a breakout. Dow Jones, I think, is itching for a breakout, folks. Believe it, like another breakout. It's already hovering around all-time highs, but I think it's wedging itself in the corner. You're looking at this monthly chart. You see it's wedging itself in this corner. It's consolidating around here. Hit this ceiling once, came right back down to the bottom of the range, and it looks like it's ready to possibly break out of this range. That could be significant for the Dow. Where could it go? We have to wait and see. But look at the RSI. RSI on this weekly chart is just below 70, so it could be looking for a huge breakout. Just like the S&P, RSI is below 70, so it shows that it has room to run. So we could be seeing a breakout in the Dow Jones in the near future, and break above this level. Then if we do break above this level around 40, look for level 4,100. 4,100 is where we could see 41,000. That's where we could see this Dow go, folks. I would not be surprised to see the Dow 41,000 before the summer's over. And I would not be surprised to see that. Right now, at 40,000 level is where we continue to hover around. I think we're going to break above the 40,000 level, and we got to wait and see where we go from there. This 40,000 level could be broken this week, and we could sustain and hold above that level. In other words, we can break above that level and then use it as a level of support as we go through the rest of this week. That's the Dow Jones. And if this we look at a daily chart, so look at the daily chart. It's definitely showing an overbought territories around 83% on the RSI. So we could see a break above this level and maybe start to back test and use 40,000 as level support before another move higher. Let's switch back to the XPX because I want to look at the daily chart on this one as well. Here's the daily chart here. How it's showing us we just hovering just below this 56,500, using it as a level of resistance. So could we continue to consolidate around here with the S&P? That we could, but we have to wait and see how that pans out. But the bulls are definitely in the driver's seat for now. So let's look at the SPXA. Let's look at the Dow Jones. So let's take a look at the NASDAQ. Our NASDAQ composite. It had a sharp reversal on about a week ago. There's a Fibonacci tool, which is what I've been using to try to track, because these have been breaking out in a significant way. A lot of some of these indices, NASDAQ was one of them. This Fibonacci tool has been getting a good tool to try and track some other areas of support and resistance, to give you an opportunity to take a look and see could we find ways to bounce or break below certain levels. So right now, we had a break above this 78%, 78.6% Fibonacci retracement level, and we came right back down to it. And look what it's doing. It's trying to use it as a level of support. This is a daily chart. Let's take a look at a weekly chart. Again, weekly chart and the NASDAQ shows RSI above 80. RSI is around 84. Could we go a little bit higher? As a possibility. Could we consolidate here? That's also a possibility. So this high up here is around 18,671. So I do look to see. There's a possible chance we can get back to that level, and we got to wait and see what happens if we get back to that level. 18,671 on the NASDAQ is a level that we could see price action trickle find a way to melt its way back up to. Then we have to see what happens if we get there. Could we see 19,000? All depends on what the overall market shows this week. But the RSI is definitely in some nosebleed territory on the weekly chart of the NASDAQ. Look at the Russell now. The Russell between the Russell and the Dow is the ones I said they still have some room to run. Russell has the most room to run, folks. But this one has been a laggard for a very, very long time. These small caps have been a laggard, and it looked like they want to try to break out. Look at all this congestion, this consolidation that the Russell has seen for quite some time. So it's been consolidating in this level since the beginning of since the end of 2023, pretty much. The beginning of 2024, we've just been back and forth in a tight range. This big green candle last week could be a very convincing move for the bulls to see the small caps really start to rally and try to play the catch-up trade. So it could be trying to play catch-up. And these fib levels are some levels that we could see the Russell try to attack as we continue through the rest of this month. Rest of this month in July, we could see the Russell really outperform. That is my guess. Now, here's some levels that we can pay attention to the Russell: 22,000. I mean, 2,200. Then if we break above that, we could see it try to reach for 2,300. I mean, we could really see the Russell outperform in a big way. And look at the RSI. It's below 70. It's at 68 on this weekly chart. You can see RSI pointing up. TTM squeeze. You see these red dots here just forming. Pretty much shows you what I just showed you in the price action movement. Have we been how we've been trading in a tight range? Well, as these dots show us that it's a squeeze, almost like a squeeze, almost like a Bollinger Band squeeze if you have Bollinger Bands on. So we've been squeezed in a very, very tight range, like it wants to break out of this range. And I think we will break out of this range to the upside. This is my personal opinion on small caps. So that's something to take a look at. Here as how it shows it's been gapping up. Right now, the RSI on the daily is definitely above 80. So this 2,100 level is going to be an area of support. So we could see a move up, but then we could see price action coming down, trying to fill this gap. But let's gap around 2,130. If we do find a way to pull back sometime this week around this 2,130, feel like gap, we could see it. It could be just a setup for the next launch. So pay close attention to the Russell as we go through this week. All right, take a look at crude oil. This crude oil it's been in a funk lately. It's been in a funk. But looking at this daily chart, crude oil has also been finding a way to consolidate, folks, believe it or not. Here's a range that crude oil has been pretty much marching back and forth between 80 to 84, 80 to 84. It's been stuck in this range for the bulk of since the beginning of this month. And it's been using, this is a daily chart. It's been using the 20-period moving average as a level of support. Because it's been riding at 20-period moving average. Will that continue? We have to wait and see. That's a possibility. This is on a daily chart. So every time, it pulls back, it's like this 20-period moving average has been acting as level support. So as the 20-period moving averages continue to rise, price action will probably try to continue to bounce and rise as well. That's what the daily chart looks like. Let's take a look at a weekly chart on crude. And this is a fib tool that I drew a while ago because after we had a bounce back in December, around December of this level, we saw that was when crude was below 70. Since that, we have not seen price action go back below 70. We've seen it try, to continue to rise, but crude oil is very volatile. So as it rises, you see these big, long, these big up days and big up weeks and big down weeks, but have not revisited that $70 level. Closest we got to us right around here when we got just below 75, 73, and put in a bottom and bounce from that point. Now it's like we're starting to consolidate again. So do we find a way to consolidate and then finally march higher, break above 85 to 90? That is a possibility. So pay attention to crude. All right. Let's take a look at gold. Gold and silver, another one that's been consolidating. Gold has been consolidating, folks. It's been this tight range. Let's see if I can draw this. So gold has been consolidating after a big move above 22,000. Now it's been consolidating between that 23 to $2,400 level. And look at the 20 per moving averages continuing to rise. So do we see a breakout, a big breakout above this 24.54? That is a strong possibility, folks. Strong possibility after the consolidation period we've been in. We've been in this consolidation period, folks, since April. It's been back and forth between the 23 to 2,400 since April. And we are approaching August. So do we see a breakout above this level? That's a possibility. So we have to wait and see. Or do we continue to see consolidation? We're not sure, but let's wait and see. But we do know that the bulls are still in the driver's seat of gold and silver. Here is the daily chart. And as you see, this strong consolidation area. Once you break above this level, folks, 2,500 is definitely going to be in the cards. All right, let's take a look at silver real quick. Here is silver also. So it finally got above this $30 level. So between this, I say between 29, between 30 and 33, or 30 and 32, 32.75, I call it 33. So between this 30 and 33 level, saying to be a consolidation level area for silver. And looks like the moving averages are definitely moving the way they're supposed to for a bullish move. You still had a 20 period above the 50 period moving average. SMA. It's like we want to continue to find a way to grind higher. It's a daily chart. Here's a weekly chart. See this consolidation area between this 29 all the way up to 32, 32.75. That is a area of consolidation, even back and forth between this range. Do we break out this range to the upside? I do think so eventually. Just not sure when that transpires, but it's good to be ready. I do have positions already in gold and silver for a bullish move because I do think we will eventually break out of this range to the upside. That is my personal opinion. All right, folks. Hopefully this is some information that you guys can use. And let me see, before I go, I would like to take a look at individual movers, two in particular. One is AMD. I think AMD is ready to play catch up and an attempt to catch up with NVIDIA. And here's a weekly chart of AMD. And this is what I do think AMD is ready to play some sort of catch-up move. Since it broke out back in early March, February, made a huge move up to that 2027. It came crashing back down, only to perform, I'll call it back in the valley, like some type of horseshoe type pattern. Came back all the way almost back down to the 50 period moving average. And like it's starting to curl to go back up. I do think AMD could see a move a continuation higher with a possibility to challenge that 227. So pay close attention to that one, folks. That's a one that I think has room to run. This is weekly chart, so it shows you that it's breaking back above its 20 per moving average already. AMD could be one that still has more room to run. And one more, ExxonMobil is another one that kind of like caught my eye. ExxonMobil looks like it's also finding a way to find some support and some consolidation. This weekly chart price action has been bouncing off of this 50 per moving average in a nice way. That leads me to believe that price action wants to find a way to go higher and get a continuation bounce or a continued move off of this 50 EMA. That's something to pay close attention to. ExxonMobil. These are two positions that I definitely do hold. All right, here's the daily chart. ExxonMobil, you see, it's been in this downtrend since reaching that 123 level, but I think this has just been consolidating. It's just been a get rid of that. I don't like that. So I think it's just been in this funk whereas it hit a level and it just started a near-term downtrend. Near-term downtrend and channel after a strong move higher. And I do think that this channel So I do think this channel is on the verge of reversing and a breakout. I think we're about to break out back above this level and get out of this channel. That's my own personal opinion. All right, folks. Hopefully this is some information that you can use. And until the next video, Tim Davis signing off.